Good afternoon, everybody, and welcome to this edition of our weekly Broker Moves Review for week ending Friday, May 21. Now, we normally do these on Friday, but there was just so much to get through for this edition. I couldn't quite sneak it in time, so we're doing it on a Monday this time around. Welcome to the chat. My name is Carl Capolingua, and I'm the market analyst over here at Think Markets Australia. Let's talk about the Think Markets difference before we get started today. $8 flat rate trades, your own holder identification number, unlimited phone support, and of course no hidden platform or subscription fees for fantastic reasons why your next ASX share trade should be with Think Markets. And if you are new to the Think Markets family and you'd like to join us and get trading before June 30, your first 5 trades are for free. There are some terms and conditions, so head to the website for more details. The agenda for today is to check out all the big ratings, upgrades, downgrades, price target changes, and more from the big brokers for the key stocks on the Australian market. And then we will have a look at a few stocks of interest as well. We'll kick off with the ratings changes, and on screen we can see the upgrades. For example, Morgan Stanley has upgraded their rating for Ampol from equal weight to overweight. Equal is basically a neutral, overweight is more of a buy. And their price target has changed also, going up from $30 to $31.70. Now that's an increase of 5.7%, and based upon that target price of $31.70 and the current price for Ampol, Morgan Stanley believe that there is about 12% upside left in the stock. So that's sort of a key to how to read these tables today. There was some news out actually for Ampol during the week. We had a budget update where the federal government has committed as much as $2 billion to maintaining the Australian refining industry, of which Ampol is a big part of, also Viva Energy. And most brokers believe that this de-risks the Ampol business significantly, and hence Morgan Stanley's upgrade. And we'll see a number of other updates from brokers for Ampol as we get through today's presentation. Macquarie, they went from neutral to outperform on Afterpay, quite a big call, maintained their price target of $120, which leaves nearly 30% of upside on that. Macquarie said that they had conducted a survey of buy now, pay later customers in the US, and not so good news. They said that there's very little customer loyalty for BNPL providers, whilst there was a great deal of loyalty for the actual retailers. Now, Macquarie chose to look at the positive side, the glass is half full version of that survey, saying that, Afterpay is the leader, the market leader, in terms of locking up the most retailers. So by default, they kind of have, therefore, inbuilt loyalty, if that makes any sense at all. Anyway, Macquarie upgraded the stock to outperform. JP Morgan on Credit Corp, they went from hold to buy, also retained their price target of $31.50, about 40% of upside seen in that one. JP Morgan noting that the share price has underperformed, and that is potentially creating some value. Their Computershare, also JP Morgan, have gone from lightened to hold, so still fairly neutral on that one. But a big pop up in the share in the price target by about 21%. Having said that, even with that upgrade in the price target, they are still thinking that there's about 7% downside in the price from the current CPU share price. Orocobre going from hold to accumulate at JP Morgan, also a nice pop up in the share price there, and that's a bit of a delayed reaction to the recent merger announcement between Orocobre and Galaxy Resources. JP Morgan likes the idea, saying that the merger would make the combined business far more diversified, and that the company would have a very strategic production profile within this sort of low carbon electric battery for electric vehicle focused supplier space. Suncorp going from neutral to buy at Citigroup. They did retain their price target, still 11% seen to the upside there. Suncorp had an investor day during the week where the bank reaffirmed their targets on both revenues and cost savings. They said that they would be trying to increase their cost-to-income ratio, which is a measure of efficiency, to over 50% by 2023. They said their loan book had picked up ever so slightly in the March quarter, and there was a very strong probability they'd be able to give the market some good news on their provisions in the not too distant future. And Vicinity Centres going from neutral to outperform there with not a lot of upside, I'd suggest, seen it from Macquarie. Heading into the downgrades, we've got APA Group going from outperform to neutral. We've got a fall in the price target here with fairly limited upside seen in it from Macquarie. They're taking a longer term view of APA in terms of the push towards environmental sustainability, and APA was just on the wrong side of the ledger in that regard. Iluka going from buy to accumulate, which is still fairly positive, but a small price target decrease there from JP Morgan. Iluka having some issues at one of their African rutile mines, operationally not economically viable and may need to be closed in the not too distant future. So a few brokers tweaking their estimates on Iluka. Nufarm going from overweight to equal weight on a 5.4% decrease in the price target, but still some upside seen there at 11.1% from Morgan Stanley. Morgan Stanley responding to the company's first half results. They are downgrading the rating simply on the fact that the valuation is not looking as good after the recent price rise than before it. The company, by the way, reported a 20% increase in revenues and that their underlying earnings actually more than doubled, so very impressive. They said that they were experiencing strong demand across their various sales channels and geographic regions, but they warned that their full year result will be weighted by the half that we've already had. They didn't declare a dividend, as they said that they would update the market on that in the full year results. JP Morgan and Macquarie both downgrading St Barbara Mines. JP Morgan from buy to hold, and Macquarie one step worse from neutral to underperform. A big price target decrease from JP Morgan, nearly 30%. Smaller one from Macquarie. A little bit left in it as far as JP Morgan's concerned, but the stock is even at this lower price target, fully valued as far as Macquarie is concerned. So Barbara in the news during the week. They are having all sorts of problems at the moment in their West Australian operations, where they're struggling to find skilled labour, and that's caused the company to downgrade production estimates. Now, there are some other operational issues going on there, but overall we're looking at 330,000 to 360,000 ounces now expected for the full year, and that's down from the previous estimate of 370 to 380,000. The company also said that they're experiencing higher costs, partly also because of those labour shortages, but also increased input costs. And you're looking at a previous estimate of between sort of 1440 to 1520 an ounce in costs, up to now 1547 to 1695. So unfortunately, bad news all around for St Barbara Mines. Credit Suisse on United Malt Group, they went from underperform to neutral, but increased the price target. The stock is still fully valued. However, now United Malt Group, they released their first half results. They said that net profit after tax was roughly half of what it was in the prior corresponding period. Revenue was down 11% as well. They would, however, pay an interim dividend of 2 cents per share unfranked. That was down roughly 49% from the previous year. They did say that despite those terrible results, they were in line with the guidance the company had put forward recently. And looking forward, they said that sales volumes are expected to continue to remain below pre-COVID levels, and there is still a high degree of uncertainty around, so not much fun there at UMG. Having a look at the price target increases here. Now, all of the ratings remain the same for these companies, and you can see obviously the magnitude of the price target increases here and how much is left to target. I'll let you press pause on the recording and have a look to see if your stock's in there. We might focus on some of the more interesting ones only. We have talked about Ampol and that support package released by the Australian federal government. So we have seen price target increases across the board there, and fairly modest upside still seen in the stock. Overweight and buy at Morgan Stanley and UBS, the other two are neutral. It is a feature stock today, so we'll check out that a little bit more later on in the presentation, as we will for Aristocrat Leisure, which released first half earnings guidance. Now they're looking for a 12% year-on-year increase in NPAT. Things are going very, very well at the moment for the company, with strong sales performance in all of their key regions. Quoting the company here, as a result, we have continued to take share and maintained our leadership of key gaming markets and segments, while we are also growing our share in digital games. We are now a top 5 game publisher in Tier 1 Western markets. Brokers responding very positively to the upbeat outlook from the company. We are seeing somewhere sort of between high single digits to up to 20% increases in price targets. Having said that, the company is looking a little fully valued there, but we still have a buy from Citigroup and an outperform from Credit Suisse. Looking down the list, a decent increase in Computershare. We have already talked about that. The rest of them, to be fair, are fairly marginal. Incitec Pivot, they did release some results during the week. They are continuing to struggle on the back of some operational issues, some plant machinery that continues to break down for them, unfortunately. Revenue was down 6.7%, 44% dive in net profits. They did declare a dividend of 1 cent a share, and it doesn't sound like much, but that is an improvement from them not paying a dividend last time around. The CEO emphasised that the results, quote unquote, did not reflect the underlying performance of the company. They were stricken by those operational issues and that they were well positioned going forward to deliver strong results in the second half. And maybe that's why Citigroup has increased the price target there by 7.4%. They still see a fair bit of upside, 24.4%, but only as good as a neutral rating from them. James Hardie also in the news last week. They had a trading update, announced their fourth quarter and full year numbers. Things going gangbusters for them at the moment on the back of a very, very strong housing market here and in the US. They did warn, however, that they were experiencing significant inflationary pressures with regards to higher pulp, pallet and freight costs, and that could be a headwind of as much as US $150 million for the next 12 months. However, the company did set a very robust profit target for the next 12 months of between 520 and 570 million, and an improvement in their margins despite those higher costs. Both of those items well received by brokers, and we can see 3 out of 3 price target increases there, with still plenty of upside seen in the share price, and brokers quite positive with their ratings: accumulate, outperform and buy from JP Morgan, Macquarie and UBS respectively. We've talked about the Nufarm news out, broad price target increases with still a fair bit of upside seen in them, and Macquarie and UBS at better than a hold. Orocobre, we have discussed that one also. Oz Minerals, that is really just catch up from JP Morgan more than anything else. You can see they are thinking that the company is overvalued despite that big ramp up in their target price. We've talked about South 32, Suncorp, Treasury Wine Estate, still getting a little bit of love there after their investor day. A small increase in the price target, but still overvalued. As far as Citigroup is concerned, we've discussed United Malt Group and VEA getting a boost as part of that federal government package to prop up the refiners. Looking at the price target decreases here, HL Energy still in the woes from UBS, a big price target downgrade, still calling it a sell. EML Payments, now they had some news during the week where one of their subsidiaries, one of the companies they recently purchased actually in Europe, was under investigation under the anti-money laundering rules, and that saw a massive drop in their share price, and brokers responding in kind, 35.5% decrease in the price target from Macquarie and nearly 15 from UBS. Both brokers still seeing upside though in the price, I guess expecting maybe some sort of a bounce back, and they did maintain their ratings, so that's encouraging, I guess, for the EML Payments shareholders, but definitely some problems there for them to deal with. We've talked about Galaxy, we've talked about Iluka, IPL and James Hardie, so let's keep moving into the second page of decreases, and they're all fairly small until we get to St Barbara. We've talked about the reasons for that big downgrade from JP Morgan, and then pretty quiet into the rest of the list. As always, press pause and see if your stock is on there. Hopefully it was on the increases and upgrades and not the decreases and downgrades. Having a look at our stocks of interest for this week, we've got 3. First one is Ampol, a very interesting chart actually. That short-term uptrend has actually taken it above this long-term downtrend zone, and we're starting to see that zone go from more of a resistance area into potentially a support area. And I say potentially because it's still fairly early stages. I think this is starting to look good actually. If it can break above whatever that peak is there, get on your chart and see what it is. Obviously right here I can't tell you what it is, but I think it's looking quite solid as a turnaround play. We may well see a little bit of resistance come in around 31.43. So I'm going to give it a tick here, but buyer beware. Look, it's hardly bottom left, top right, is it? I think it's more likely to go up than go down, but it's not exactly one that you would say it's going to shoot the lights out. So I'll give it a tentative tick there. Probably a tentative tick here also on the broker ratings, with 2 strong buys, 4 buys encouraging. Disappointed that there are 2 sells. Typically, I don't like to see those lurking in the system because the brokers have done the research in this. 2 of them have found reasons not to like the stock. Looking at some of the numbers here, enterprise value to revenue is outstanding. So the market average on that one is give or take around about 3.5 to sort of 6. So that is exceptional. Having looked down the list, the PE is not fantastic, not cheap. The market PE is around about 17, so we're a bit more expensive than the market there, but there is some growth in the business. That's a very good PEG. We want that to be less than 1, and that is forcing the PE down, so that's encouraging. Dividend yield is quite attractive. Price to cash flow is quite good, and return on equity is fairly reasonable. I wouldn't say it's shooting the lights out, but it's not too bad either. So not too shabby at all on the fundamentals. I'm quite happy to give that a solid B or even a B+. That's what I think. Let's see what the brokers think about it. Well, Citigroup, they have raised their price target substantially. They're neutral on it. Broker anticipates the Australian government support of Lytton refining plant de-risk the business. Capital return now increasingly likely. Credit Suisse, they've gone from 27.54 to 29.87. They've also retained a neutral rating. Pretty similar rhetoric here. But does not totally eliminate the downside risk. Morgan Stanley have gone from equal weight to overweight, so that is an upgrade. They've raised the price target as well. And this particular broker note here was actually ex post the budgetary announcement, so they're commenting more on the company's move to become carbon neutral by 2040. That was an extra bit of news out on the company during the week. And on UBS, they retained a buy. They upgraded their expected earnings for the next 3 financial years by as much as 17% due to the government's fuel support package. Sees it as a significant de-risker of the business. So fairly positive there, with just probably Credit Suisse the only one with any warning. The next focus stock we've got today is Aristocrat Leisure. And if I said Ampol was not exactly bottom left, top right on the chart, probably going to go up but not shoot the lights out, then this one actually looks like it could be shooting the lights out. It is more bottom left, top right. It has broken through its pre-COVID all-time high, which was keeping it down through here. Very impressive. I'd be happy to buy this on any pullbacks. You might see it come back into that 40 zone. But I would continue to buy this, on those pullbacks within that long-term uptrend. I think the chart looks amazing. What do the brokers think? We've got 2 strong buys, 7 buys, 3 holds, and hooray, no sells. So that's a big tick for me. So a tick here. Enterprise value to revenue is not fantastic. Having said that, the PE is very high, but there is growth in the business, and the growth appears to be accelerating, so that is bringing the PE down. Now, if you've got a strongly growing business, I don't mind paying higher multiples for that growth. So without actually doing the background research and finding out what that growth rate is, I can't tell you 100% whether that PE is high or low. But what we can say is that it will be coming down because of the growth in the business. The dividend yield is nothing to write home about. Neither is that. And that is exceptional. That is almost as good as it gets, and it pulls up some of the deficiencies in some of the other ones. So what we're seeing here is management's ability to squeeze blood out of the stone, to squeeze profits out of the limited net assets of the business. So that pulls up the other ones, I think, and we're getting a very solid B to B+ here. Tick, 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 tick. It's a yes from me. What do the brokers think about it? Well, we've got a buy rating from Citigroup, we've got an outperform rating from Credit Suisse, we've got an accumulate rating from JP Morgan, and a buy rating from UBS, with just Macquarie a bit of a wowzer there at neutral. I'll let you press pause and read through those comments there. They're fairly positive. Having a look at James Hardie as our third stock of interest. This one also is bottom left, top right, but unfortunately it has moved beneath this short-term dynamic trend support zone. That's concerning. The candles are turning a little bit black. I'm concerned about that. The price action has moved to lower peaks, lower troughs. I'm concerned about that. The long-term trend is still up. I need to see how it responds in here. This is the big question mark. And the pattern you want to see if it gets into that zone is something that kind of looks like that. Okay, so if you see that in there, I think that would be constructive of a long-term buy. Until then, wait and watch on the chart. The brokers do like it though, so I'm pretty happy with 2 strong buys, 6 buys, 2 holds, so that's a big tick for me. In terms of the fundamentals, that's about average. That's a little bit above average, and there's not enough growth in this business to justify that, I think, just based upon what I can see here. Dividend yield is not bad, not great. That's about average. This is exceptional though, so again, it's probably a solid B on that one. So tick, and just a wait on James Hardie for me. The brokers are neutral, accumulate, outperform, and buy. And we did see 5 out of 5 price target increases there. So I'll let you read those comments and we'll keep moving. That's it for me today for this update. You can catch all of our other market updates in our market news section of the website. You can follow me, all the Think Markets handles on Twitter. We have a webinar coming up tomorrow where you can get more analysis from me, bring your portfolio to the table, and I'll give you a quick fundamental and technical on any stock that you are interested in, or it could be a cryptocurrency or a foreign exchange or a commodity, whatever you like. The course of the discussion is up to you. Of course, register for some of the other upcoming webinars we have. The disclaimer before I leave you today says that everything we've discussed is general in nature. We are a regulated Australian broker, and we do have some products that could see you lose more than you deposit, so please read this disclaimer carefully, and if you have any questions at all, give us a call. Thanks for joining me today. All the best for your trading until we catch up again. Bye-bye for now.